Hey guys, what's up? This is Andrew for TRENDLINES.com. So in this video guys, as usual, we're gonna start with a market update on AMC and GME. Then I want to talk about quickly Triple Q, Twitter, Atter, and I want to show you as well the two indicators that for me are very important today, which are the US 10-year yield and the DXY, and I'm gonna tell you why. So let's get into it. And guys, as usual, let's start with AMC. So yesterday, I was telling you guys that we were still on the first time frame having this kind of situation that looks like a reversal situation because we can see the move down is slowing once again, as can be seen on the momentum. MACD going higher. Even here we still have the bullish divergence on MACD. We lost the bullish divergence on the RSI. Okay, so once again, momentum going higher, price action going lower. So this is usually a situation where we can expect a reversal, especially if we have a nice consolidation. So as you can see, I did my video, I think around here, and I was spotting this wedge pattern. So today, what happened? As usual, guys, we opened the day with some hope, and we got rejected at the 16.3 resistance level, which is this trend line good? Yeah, okay. Well, we didn't even touch this trend line, this upper band. And for now, we are rejected. So we are below the 16.3 level, which was our last support, being the breakout level before 13. And we broke out below this trend line here, which was forming the wedge lower band. So it's not looking good. We lost the bullish divergence here. We still have the bullish divergence on the MACD. And same thing, guys, we are still waiting for bulls to do something finally and to manage to have at least, guys, a breakout above this trend line, which I believe will give us a nice bullish reaction. Let's see how high this can go. Once again, as long as we are in a bearish environment on the global market, you guys know, you guys have seen that AMC and GME cannot fight it by themselves. So we need the global market to look better for those stocks to have the energy to reverse and finally for bulls to take back control. So for now, bears in control, and once again we are waiting for a daily close above this trend line, which is right now around 16.3. So let's see what's going to happen here. What else can I tell you guys? Nothing. Let's go on the daily time frame quickly. What do we have? MACD still going lower on the daily. Not much information here on the hourly time frame. What do we have? You can see those volume, guys, lower and lower and lower. I mean, so it just means that there is not a lot of trading on AMC compared to what it has been before. It's good and bad. It means that investors lost interest, which is not good, but it means also that whenever bulls are going to start to come back, we know what they are capable to do, right? Capable of doing, because we've seen the volume involved whenever AMC starts to rip. And if only we have one day of this buyers coming back, it will be enough to destroy every bear that is standing between the 16 and I would say 19. We'll probably go to 19 easily. Above 19 we would need to see. So for now we don't have the reversal, we are waiting for it. So let's see. Once again, we need a close above 16.3 for bulls to take back control. GME. So GME has fulfilled the prophecy, which was going to the 61.8% FIB ratio. As you can see, it was 124. Today we had a bounce at 124.5. So somehow, so of course, all right, the charts are not looking good, guys, but I'm always trying to find the good thing in the information I have from the price action. Here, the good thing I see is that at least this target has been reached and maybe bears will finally let it go. But once again, guys, we need a comeback on the global market. So let's have a look at that. And for now, we don't have it. So let me quickly remind you guys what I was saying here. I told you that 318 was support. It has been crossed yesterday on increasing volume. So that's a breakout. Let's be honest. That's a breakout, but we didn't have this consolidation before, just like we had here, which gives energy to the move. So for now, I would say that you know, we could break it, but most likely, and this is what I said this morning in my Discord, bam, bam, bam. I said that we arrived on 318 support. We might see a dead cat bounce today, all right? A dead cat bounce. Why? Which means the market is, you know, bouncing but quickly getting sold. Because whenever you arrive on a support that has not been touched for quite some time, you often have these bullish reactions, but you often have as well early profit taking. So let's zoom in a little bit on the hourly time frame, guys, and you're gonna understand what is happening. So let's see, maybe we're gonna finally manage to make this reversal here as well on the hourly time frame, guys. Same technique, you make a trend line. So at the beginning the trend line has only 2 reactions, 1, 2. Then here this morning we had a 3rd reaction here, then 4th, 5th, and now we are fighting this level. So here we have clearly a nice consolidation that is taking place just below this trend line, which gives energy to the potential move to come. But for now, bears in control here. This was a strong This was a strong signal sent by the bears, which is that they managed to went through this level. All right, we closed below 318 yesterday, so bears are strong, all right, and they made the point. So right now, oh look, guys, maybe this is the rebound we are waiting for. So let's see what's gonna happen here. But maybe we're gonna be able to have this bounce if we do have that. So let's find out very soon. It's looking nice for now. We might have still a dead cat bounce, I believe, but a little bit longer, which means that we would probably, would probably manage to, you know, have a nice rebound. Maybe, so it's, let's see where are the resistances level here. Is this trend line still valid? All right. This trend line is not too bad. Okay, because you can see this trend line is not too bad, because whenever we went through it, we had a strong move. So this trend line was acting as support. As you guys know, after support has been broken, it's acting as resistance. So here I see resistance at 330 and then 338. So basically this whole area is for me an area to actually sell for those who have a long position. Not financial advice, but I'm personally flattish on this market. I even made some money yesterday. Because I'm having a decent short position on triple Q that is protecting the rest of my investments. I'm not taking profits here once again because I don't want to lose this protection, because I know that things can go fast in this area. I'm unfortunately afraid we go to 280, guys. I explained that yesterday. But if we manage to have this breakout above this trend line, so for now we are getting rejected again, but let's see, maybe we're gonna manage to break it before the end of this video. Then we're probably gonna go to this trend line 330, and from here probably rejected. If we manage to go higher, probably rejected here. So even if we have here a dead cat bounce that can be a little bit higher than only that, it can, you know, be a plus 5%. I still think that bears are in control as long as we are below 338. So I would personally, as I am neutral right now, if I was long, I would take some, I would take some short position here on triple Q, or yeah, I would just take some short position here. I would add here and I would add here. As I am roughly neutral, I don't want to take the risk to take a short position here when I know this market can go here and still be bearish. So I only gonna build a new short position around this area. So maybe 330 I'm gonna take a little bit of short. Let's see, I'm gonna let you know, guys. For those who are with me in Discord, for now I don't do anything. Today is a quiet day for me. I didn't trade anything yesterday as well, guys. I'm a bit in a wait and see mode. Wait and see what you're gonna see, what I'm paying attention to, guys. I want to talk about Twitter and Atter, but very quickly, I'm not gonna spend too much time on that, guys. I explained that yesterday. For those who have not watched my video, go check what I said about the US 10-year yield. But very quickly, it is a good indicator of a incoming big crisis. All right. If we stay below 285 on Friday, so the day after tomorrow, we are Wednesday, right? Yeah. If we close above 285 on Friday, this would be a second weekly close above this resistance line. That is a 40 years resistance line, guys. It would really not send a good signal to the market, all right? And this is due to inflation. And once again, it is the expected, the US 10-year yield can be seen as the expected return of the market, which means that companies need to beat 2.8% of return on the on their businesses to attract investors. So the higher it is, the tougher it is for investors. I mean, the less interesting it is for investors to go to the equity market, so they usually sell the equity when we are in an inflationary environment, which is the case right now. The second indicator, guys, that I have not shown you for quite some time, but I always keep an eye on this one, DXY. We can go on a weekly time frame, guys. We are trying to, I'm trying here to use some indicators on the long term to try to guess if we are only in the correction or if we enter a real bear market. And for now, guys, you might think that triple Q is cheap. I can tell you that we can easily have more downside if things turn really bad. So for now, this is not cheap for me. Once again, I would personally not load a long position on triple Q or on the rest of the market before 280, all right? Because I think that 280 is going to start to be cheap. For now, it is not cheap. And what I'm paying attention to know if we could even go below 280 is, once again, US 10-year yield and DXY. Why DXY, guys? Because DXY, the dollar index, is a very good indicator to measure the fear that is in the market. Why fear? Because when people are scared, you guys know that all the debt is labeled, is denominated in dollars, US dollars. So whenever we arrive in an environment with tensions, just like right now because of the war and because of the COVID that is creating lower growth in the whole world, and that is just not good for business, we usually see a rush for the dollar. You can see each time we had a crisis, I mean, a strong move down of the market, DXY was at 103, all right? Here, COVID crisis, this was when we increased the rates in 2016, that gave us a correction, a big correction on the global market. You can have a look. This was the COVID crisis, and this is now. So something is telling me that maybe, a scenario that could make sense is that this is just the end of the correction and that we're just going to get rejected here, and rebound, right? Bam, and rebound. Maybe. I wish. I don't know. I wish. But this is something possible. But on the other hand, what makes me think that this is a possible scenario is that we arrive here very extended. As you can see, the RSI is flying around 78, guys. So very high RSI. And we arrive on this resistance that has not been touched for 2 years, all right? So usually when we arrive on a resistance that has not been touched for 2 years, we get a selling reaction, especially when we are extended, which means we don't have any consolidation. We have one here, but it's quite far. And we are basically moving strongly higher without taking a break. So if I only pay attention to DXY, my take is that we get rejected, which means that it is bullish for the market. But on the other hand, if we have really some structural reasons because of the fear, once again, DXY is an asset that investors will go to whenever they are scared, all right? Scared of what? I don't know, but just scared. They want to have US dollars because they feel this is the best currency to hold at the moment to pay back the debt if they are indebted, if it's like a foreign country. Whatever the reason, the dollar is just giving confidence to people. It's like a strong currency, right? So if we really have those structural issues that make the DXY breakout here, I think if we have a breakout, it will be a massive one, all right? I think it can do plus 5% in a matter of one day. This would be just, exponentially going higher. And if we enter this territory, here I can bet everything you want that we would break out as well, and the global market would probably go to 280 quickly, guys. Yesterday we did minus 4%. It was a long time we didn't do a minus 4% on the Nasdaq. It reminds me, guys, what was happening here, right? Here we did, I think, minus 4, something like that, minus 5, all right? So the last time was in September 20, guys. It was a long time it didn't happen. When those things that didn't happen for a long time suddenly happen, it's not good, all right? Because it reminds everybody bad memories. So investors are scared. They don't want to buy the dip whenever, they remember some bad things. So once again, it doesn't mean for sure we're going to break out here below that level. But I see a dark scenario, guys, where basically DXY is breaking out above 103 and US 10-year yield is breaking out above 285. If I see that and triple Q is not at 280 yet, guys, I think that wherever we are, I'm gonna, you know, take a short position, because this would be really bad. Okay, I don't want to think about what could happen with AMC and GME if this happens, but guys, it would not be good. We will probably go to 13. All right, but we're not there yet, and we have a very reasonable scenario where we just get rejected here once again, get rejected here, and have a strong rebound on the equity market. So let's hope this is what is waiting for us tomorrow and Friday. Now, I want to talk quickly about Twitter. As you guys know, Elon Musk bought Twitter, all right, at 54, I think. So not a very good trade for now. The question is, should we jump in this trade? I mean, I discussed that a little bit with some members in my Discord, and I mean, I don't see the reason to rush into Twitter right now when we have a clear resistance line. Why is it clear? 1, 2, 3 reactions. That has a resistance at, let's say, 59, but it's going lower, so maybe 58 in a few months. So I prefer to buy Twitter at 60 whenever we have some bullish signals, all right, rather than buying it at 50, which is 20% lower roughly, and having a high probability of rejection, because guys, we have a gap here. I mean, the global market is bearish, so I would personally not jump in this trade. I would wait for more clarity. I would wait for a breakout above roughly 56, 60. We can also draw another trend line that is coming here, but this trend line has only 2 reactions, 1, 2, I mean 3 now. So it's not a strong trend line. It's still acting as resistance right now. So maybe if we break out first below that, you can make, I mean, a long position here, stop loss here, and try to play, you know, to buy a little bit earlier. But once again, guys, I mean, there's no rush, all right? We have time. The market is not going to suddenly rally and never come back, all right? We're going to have the usual, you know, ups and downs with some pullbacks, with some nice opportunity to buy in a few months Twitter at, I believe, a price that is not much higher than now, and we're going to be in a bull market. I mean, if we are, I don't know. But I mean, if we are, there are going to be some nice opportunities to buy it here. I put that in my alerts, and I'm going to post that, of course, whenever I see it. Last one today, guys, Atter. Atter was a stock that that is behaving very well, guys. All right, we almost reached the target. I here gave in my Discord a buying signal, and the target was at the beginning 540, 50%, then 730, and we went to 729 or 26. All right, so we missed the target for a little, then we got stopped here. So right now, I can clearly see that the 20-day moving average acted here well as support, so we can expect this to act again as support. So maybe if we come back to 450, there is a nice trade to take. Buy 450, stop loss, let's say 4, and just hope that we hold above this 20-day moving average. And once again, I personally won't be taking that trade because, you know, I don't have time to take those day trading positions on many stocks because I don't have time to monitor everything. So I prefer to do some swing trading. And I here have a signal that will be triggered whenever we break out above this trend line, right here. So roughly above 7. But once again, for this breakout to be good quality, those who have the calls know that we need to have a consolidation on low volume and then a breakout with increase in volume. So let's see if we're able to do that. So my preferred scenario would be that we just, you know, oscillate here for, you know, a few weeks, even a few months, and then that we have a breakout here. So this would be kind of an easy trade, all right? So this is what I'm personally paying attention to. So that's it for today. I hope you guys enjoyed this video, and if you did, please don't forget to click on the sub, like and bell button so you're gonna be the first to know when I upload anything new. And stay close to shore. See you guys.